Welcome to the Profit Talk Show. In this show, we're going to explore strategies to help you maximize profits in your business while scaling and creating the lifestyle that you want as an entrepreneur. I am your host, Susanne Mariga. I am a certified public accountant, a certified profit first professional, and a certified tax coach. And today we're going to talk about strategies to help you maximize profits in your business. Hello, Profit First entrepreneurs and thought leaders. I am so excited. Today we have a very special guest. We're bringing on Kevin Steuer. Kevin is an entrepreneur. He's also reshaping how retail traders access technical analysis in terms of investing, in terms of Wall Street. And he owns a company called StockTA. It runs over 161 million lines of code to deliver highly accurate data-backed trend scores and support resistant levels. It's got an algorithm that analyzes price, action, volume, and momentum across timeframes to identify high probability setups and give you traders really access to information regarding your equities, commodities that you might be investing, crypto, or even ETFs. And I'm excited to bring Kevin on today because we are going to talk about investing, because I know a lot of you guys you've been doing profit first faithfully. You've been doing your target allocation percentages, transfers. And one of the biggest mistakes that I see that happens with entrepreneurs is, yes, they do great with creating profit, right? And you guys do good with reducing taxes. You're getting with your accountants every single quarter. But what happens is you just have this cash sitting in your checking account or savings account, and it's not growing. It's not growing in the maximum way that it can possibly grow, or you're putting it in your 401k, which is good from a tax strategy standpoint. But there are ways of growing your wealth by investing and having your money really become its own company and grow for you. So I'm excited to bring Kevin Steuer to our platform today to talk about StockTA, to talk about investing. So Kevin, we love to start our podcast with just the background story. Tell us about how you got into this.
Yeah. First off, thank you so much for having me. I really look forward to connecting with your users, and you have a really interesting podcast, and tax is not something I know a lot about. And I've been listening and trying to learn and get better, because that's something I always thought I would just try to win as much when I trade, and then the taxes are just deal with it later. But as I've gotten older and more into this game, I'm like, ooh, there's ways I could be more efficient with this and to not have to pay so much at the tail end of the year or quarterly when I have to pay taxes. Really looking forward to this conversation. And my background is I got into trading, more investing when I was honestly in middle school. My grandmother was big into the stock market, and she did really well over the years. And she just had this process that worked really well. And I starting to learn from her and started to read books about investing and follow it. And then I got into college and started trading more frequently. And I went through all these different phases of being a fundamental investor, being a value investor, all these different ways of doing it. And I always kept a trading journal. That's one thing I would recommend to your users. And I just took a lot of notes. And at the end of every year, I sit back and I take time away from trading and just reflect and have some goals and reflect on my process. And it's just changed throughout the years. And I use trading to help pay for undergrad. I use trading to pay for my grad school. It's allowed me to live a debt-free lifestyle. And it's just been a really great, at first it was just a side hustle and a hobby that's turned into more than that. And now I have StockTA passion project that I've been working on the last couple of years. But I started working in consulting, and I got put in touch with the original user of this website, and he created it in 1999, and it's had a long track record. It's had a very loyal user base for over 20 years now. And I just started using the site and implementing it into my process. And all of a sudden, my trading just got so much better. And I got to know the owner well and just learned from him and just really try to improve my trading percentage. Like, I'm a former athlete, I'm very competitive, and that's why I like trading, because it's so hard and it's not easy. And they say good traders win 50% of the time. Like, where else in life can you be 50% and mentally be okay with it? So it's tough. And it's just been a really fun journey, and I've really enjoyed it, and I hope to keep doing it for a long time.
I love it. I love it. That's really great. And it's very interesting. You said your grandmother got you into it, because I know we have a lot of women out there that listen, as well as guys. And it's interesting that one of the things that I think women we get slack on is the fact that we don't invest and the fact that your grandmother, I imagine she's probably at least in her 70s, right? And that she started investing. That's pretty nice considering that they say a lot of older generations have shied away from it. So that's great that she was able to teach you and learn and be successful herself.
She was super. She's still with us, thankfully. She's 92 and she ran her own small business. She was just super smart, super efficient, just had it all together. And I was very lucky to have somebody within my own immediate family that I could learn from and just watch her build her business, watch how she invested. She had a great track record in both for a long time.
I love that. And 90, that puts her in a whole different generation, right? To
Yep.
have started investing back then and in her 90s. That means she's like probably like a like 1920s baby. So she saw the stock market crash
Yeah.
practically. That's even better. What type of business did she run, if you don't mind me asking?
Yeah, so they owned a flower shop, and with it, they had three massive greenhouses, like the size of football fields. And her and my grandfather ran it with some help with some people. And I grew up in rural New Hampshire, and they were like the biggest growers for a long time. And just, I remember around the holidays now, just like all the flowers for Thanksgiving, all the poinsettias for Christmas, all the decorating for churches, Valentine's Day, like just roses and just it was like fields of flowers. They just had so much stuff and they were just they took it over and they built it basically from this small little flower shop into a regional powerhouse and they did it for 30 years.
I love it. And a lot of times I think people get stuck on, I want to be on the next wave AI. I want to be on cutting edge technology and invent something that the world has never seen. But you'd be surprised how many self-made millionaires I've made or met who really just started with the simple things,
Yep.
things that are like right under your nose, like a nice garden and a nice house that smells beautiful all the time, right? Can create that generational wealth out there. Look at what's right around you, right? You don't have to be super innovative to be successful. Now, I want to know a little bit more about, I guess, StockTA. What does it do? And what are some challenges that you see entrepreneurs have? And why does StockTA help them solve
Yeah.
this?
So I think part of it is I think there's a big misconception out there. And I think when people get into trading, they think I'm trading against you and it's man versus man or woman versus man or however. And JP Morgan came out with a study a couple years ago and it blew my mind because I knew it was high, but I didn't know it was this high. They estimated that 90% of all US equity volume was driven by algorithms. So that's computers with machine learning, with their own algorithm. And every one of these institutional hedge fund family offices, they either all have their own algorithm or they lease it and use it from somebody else. Trading is basically math, right? It's very cutthroat. It's just numbers. And some people's brains are good with numbers and some aren't. And if you're not good with numbers and you don't have a process, you start investing money, money becomes emotional. All of a sudden you start making bad decisions. I see people blow up their books. And I think with inflation and just the cost of living now, I think a lot of people have turned to trading as a side hobby to be like, hey, I can do this during my day job and I don't have to work as an Uber driver or work on the weekends. I can spend time with my kids. And they start investing because they think it's easy. And then they realize really quick how hard it is. And when you're in a bull market, everybody's a genius. You can throw darts, you can pick whatever stock you want. It's going to go up. You're going to feel really good. But the past month, when trading's been really hard, like I do a newsletter. I don't do it as often as I should, but I sent one out beginning of November and I just looked at my algorithm and I said, I could just see the volatility coming. And that was the title of my newsletter is like, hey, volatility's coming. Don't let one bad month ruin your book for the year. So like I've had a great trading year this year, even with the tariffs, but the market's been overall pretty good. There's been some periods of choppiness, but if you navigate it, you're going to have a really good year. The last couple of weeks have been really tough. And if people were fully invested, they don't have stop loss, they don't have a process. I've had a lot of people text me, email me, be like, I was up 10, 20% on the year and now I'm even, or now I'm down because of a bad month. And that's really frustrating when you have a lot of people, a lot of my users, they have a year end goal in mind. Here's how much money I want to make. Here's what percentage I want to make. I want to outperform whatever index by this much. And a bad week, a bad 2 weeks can totally derail that. So if you don't have a process to figure out how you're going to trade, when that volatility comes, and it comes quick these days, like there's so much leverage in the system, all of a sudden you turn on CNBC and it's down 2 or 3%. And you're like, it's not even 10 o'clock yet. What's going on? There's no news, there's no anything. So I just think my goal is I'm trying to help basically Main Street compete against Wall Street. And Wall Street has algorithms. The average user, who's average retail trader at home, doesn't have access to this kind of algorithm. And I didn't build it at the beginning, but once I took it over, we went back through and we used modern day AI to update and refine the algorithm. We actually made it even more accurate. So we're really happy with the product now. And we're actually launching a new version of the site probably in about 2 weeks. We're going to try to get it out by year end. But we're constantly refining, we're constantly taking the data and learning. And as AI changes, we're uncovering like new ways we can scale this and make it even better. But basically, it's if you don't have a process and you don't understand the numbers and you don't understand how the machine works, and that's what I call these algorithms, like you're trading against the machine. So if you can't think like a machine, you're at a disadvantage. So I'm trying to basically take our machine, put it with a person, and my idea is person and machine can hopefully compete with or beat another machine out there.
Wow. So let's talk about first. I'm going to scale it back a little bit for our listeners because I know you guys out there, you may not be traders, and these are some big words for all of us. And we want to make sure we understand what these are because big words can be scary and they can put us in inaction, which is what we don't want. So, Kevin, tell me, first of all, what is an algorithm? How do we describe what is an algorithm?
Yep. So we measure and map if you pick a stock, so we can pick Microsoft. The ticker is MSFT. So we measure map all the price movement, the volume, like all these different factors that we measure throughout the day. And we put all that stuff into an algorithm, which is basically just an equation. And then we measure all the different things and we run technical studies through them. And different technical studies measure different things. And what we look for is this is a fancy word, so not to trigger your users, but it's called a confluence. And basically, that's just a fancy word for where things meet. So we run all these different studies and we see where things meet, because where things meet, that could be a pivot point, a support point, a resistance point. And we create a trend score, which if you're long a stock and you want it to go up, you want something to be bullish. And if you're short something, which I don't recommend your users do because shorting's really hard, you want stuff that's in a bearish trend. So basically, I try to keep investing really simple, right? Like I look at stocks, and the way I look at it is if I pull up a ticker, they're interviewing for a job in my portfolio, right? There's tens of thousands of tickers out there. I don't have to buy Microsoft. It's my choice to buy Microsoft. So if I make a mistake, I need to own it. And that's part of learning to be a trader is you got to learn from your mistakes and you got to own them and hopefully improve and get better the next time. But I look at all these different tickers and I have a very macro, like top down approach. So I look at the bigger, what's going on in the world, and I look at sectors, and then I can get, granular from there. But basically, like I want to find stocks that are long and don't have a lot of overhead resistance and have support underneath it, because I want that asymmetric risk where if I'm betting on a stock, I'm betting that it won't go down much, or if it does, I have my stop loss in. So I want to keep my losses small. I don't want to have big wins. And I just want to if I can consistently hit singles, doubles, triples, if I get a home run once in a while, that's great. That's not what I'm going for, because if you try to hit home runs all the time, you're going to strike out a lot. So I try to keep it really simple. The trend is your friend. I try to find stocks that have good support underneath them, not a lot of resistance. And what my algorithm does is it does all that hard work for you and it just spits out numbers. And we have how-to videos on our YouTube page to explain that more in depth. But basically, we're trying to help the average person who's working 40 hours a week, commuting, taking care of their family, coaching their kids' little league team, whatever it is, with investing. And how do we do that is you take a lot of data and you simplify it so they can make quicker decisions, hopefully with investing. Like we're not trying to be Captain Stockpicker telling people buy this, sell that. Like we're trying to give people the data so they can figure out whatever their investing process is. Like I'm a swing trader, I don't day trade, but I hold stuff for a week or two or a month, depending on what the trend is. And then when the trend breaks, I get out. And I try to catch those rotations between sectors. So I'm trying to constantly ride the up wave. And there's always a great trade somewhere. You just got to know where to find it. And I tell people, like, You can be the greatest fisherman in the world, but if you're fishing on the wrong spot and there's no fish, you're not going to catch anything. So that's where this algorithm helps is we have a stock screen. It can tell you like what's bullish, what sectors are improving, and you want to find stuff with an increasing trend score because that means it's gaining strength and will hopefully go up. So again, we try to simplify stuff to make it easy for we have people who are new to trading who have been using the site for 20 years. We have advanced option traders. We have people who go long, people who go short. We have institutional clients. Like we have a wide range of people and they all like the site for a different reason. And that's why I think it's cool because I think we're helping a lot of people. And it's interesting, like we're trying to build a community so we can all help each other. And we've been doing Discord chats, and I don't like going on the internet too much because you get some crazy comments. But in our Discord, we've had some good back and forth with some really good traders, and it's like I'm learning from them. And this is great because they're helping me be a better trader, and that's going to help my bottom line. And that's what I want is I want to help people win. So whatever that extra money that you use, if it's to help pay off your house earlier or go on vacation or buy your kids Christmas presents, like it should be fun. If trading is stressful and you're losing your mind over it, you're probably not doing it right.
I love it. I love it. Now, you said something that was very key, and I think it's really important for this market where stocks can be a bit volatile. You said something about a stop loss. And let's go a little bit more in detail as to what that is for our listeners
Yeah.
in order to mitigate risk.
Yeah. So if I enter a trade, I set a stop loss below it. And I usually try to find good entry points where there's good support. So I'll set my stop loss below that support to see if that support holds. And if it doesn't, then I get out because if my stop loss gets hit, it means I got the trade wrong. It's probably going to go down more. So whatever, it's different for everybody. Some people keep their stops tight and it's 2%. Some people are 5%, some are 10, like whatever your risk parameters are, that's kind of where you set your stop. But what I've learned from doing this is everybody has their own algorithm, right? And all these machines know where these stops are. So there's a lot of times in the mornings, and I've seen this countless times, and it's very frustrating. You set your stop and you set it too close, and the machine knows where your stop's going to be, and the algos push it down through support. So say you bought a stock at $10, you have support at 9.75, and that's where your stop loss is. The computer will run it in the morning, drive it down to 9.72. Everybody gets out, then they buy it all back, and in the afternoon it's up to 10.50, $11 a share. And that's how this market works now, right? Because it's all computer driven, and you have people who are high frequency traders who they're trying to do that thousands of times a day and make a penny, 10 cents, 50 cents, whatever it is, and that's how they make their money. So if you don't know where to set your stops, there's been a lot of times where people are like, oh, I set my stop. I should have set it at 970. Like I knew better, but I set it at 972 and it ran through it. And now I don't want to chase it in the afternoon when it's back up 2%. So stop losses are good because you don't want to blow up your book, but you got to know where to set them because they're going to use that against you if you don't use it.
Got it. And that's where a good software like StockTA, where that kind of knows where that happens at, would be very instrumental from that. Now, you said support. Now, what do you mean when you say based upon your support?
Yep. So if you look at like a stock chart and you can see it'll be either on a diagonal this way or flat across, there'll be support and it's lines where the chart bounces. So I use the charts. I try to cut out some of the noise. I have to pay attention to the companies and earnings coming up or what the Fed's doing. But for the most part, I'd say 80% of my focus is what's going on in the charts because I believe that's price discovery. It reveals what's going on in the market and what the sentiment is. But you can see this if you do this for a while, you can see it with just naked eye. You can look at a chart and see. But if you're a first time trader or new to trading, you're going to need some help. So basically, you want to find where support levels are. And that can be 200-day moving average, could be one. It could be just a price movement of it's a pivot point where the stock kind of bounced and swung up or swung down. So that's what our algorithm measures and it spits out numbers. So our confluence system goes from 1 to 300. I've seen some crazy high confluence numbers, but basically 1 to 5 is light. So that's light support or light resistance. 5 to 15 is your medium, and then anything over 15 is heavy support or resistance. So you can see if a stock has heavy resistance above it, the first time it tests that resistance, it's probably not going to break it.
Mm.
So it'll chip away at it, it'll get rejected, it'll come back down, it'll find support, it'll run back up again. And the time frame can change. It could be some stocks, it happens every day within the time frame. Sometimes it happens once a week, once a month. That's where you got to watch and pay attention. Heavy support and heavy resistance usually, unless the market is a bloodbath and selling off, like it usually holds the first or second time it's tested. It's usually like that second, third, fourth time that it gets tested that it finally either breaks through or breaks down. So those are like the key numbers I look through. And I just try to find stuff that GLD, for example, this morning was downgraded to neutral in our system. It has heavy support. Heavy support was like, I think, less than 30 cents away from where it was going to open. So that's something I'm watching. I don't have a position in GLD right now. I sold some a couple weeks ago, but if I was long that and it broke support, it's probably going to have a weakening neutral trend score, which was weak already, but the overall trend score was bullish. That would probably flip to neutral, and then you're going to see some downside movement. And once it breaks trend, like you'd be amazed that once it breaks trend to the upside, buying usually creates more buying and it powers through and it goes up. But on the flip side, when something breaks trend to the downside, it usually goes down a lot quicker. So it's like how you hear people say escalator up, elevator down. So that's something I really try to keep an eye on, because when things break trend to the downside, that's usually when bad things happen. And that's when a 2% loss turns into a 20% loss in 2 weeks. And if you're bag holding that, now you're like, what do I do? And you might have to sit on that position for 6 months, and that's sunk cost at this point.
Oh yeah, definitely. Definitely that can, especially in a market that you never know when it's going to hit the floor.
No, you don't. And there's so many things outside your control in trading, right? So right now there's arguments in front of the Supreme Court about the tariff stuff, whether that's legal or not. Some people say that's priced in, that people know they're going to lose. Okay. Or the government knows they're going to lose. Okay, let's see if that really happens. I bet it's not as fully priced in as people think. Or maybe the Supreme Court hedges it and says, hey, we're going to keep the money that we already did, but we're going to change it moving forward. Like, I'm not a tariff expert, I'm not a Supreme Court expert, but like you gotta keep those scenarios in the back of your mind. We have this big buildup with Venezuela, the military. Who knows? I'm not a military expert. Maybe we invade Venezuela this weekend. That will probably not be good for the market on Monday. There are so many things outside of your control as a trader that you have to be aware of, but you can't control, and you have to manage that risk.
Definitely. And it's a lot different than investing in mutual funds or index funds and that type of thing too. When you get into those individual stocks and individual items that you're investing in, but the upside can be better too.
Yeah, it really depends what your risk tolerance is. There are people who did really well in crypto earlier this year, and I wrote my newsletter a couple weeks ago. I'm like, the crypto setup here is really bad. And I have owned some crypto in the past. I sold some to lock in some gains, and then it's been down like 30% in the past month. And I wouldn't want to wear a 30% drawdown. And I don't know if now's the right time to buy, but I'm watching it to see where it forms support, because, crypto could do really well next year. I don't have a crystal ball, but you need to risk manage it in the short term if you want to make money in the long term.
Definitely, definitely. So tell me about mistakes. Tell me about what are the mistakes that our investors are making in December of 2025.
Yeah, I think some of it is based on the Fed. There's everybody, I think, was so like there was like there. I think earlier in November there was like a 90% chance there was going to be a rate cut in December, and now it's not 90% anymore, and everybody's losing their mind. Like, okay, it still might be 50 or 60%, but you got to see how that goes, because that'll impact your growth stocks, your small cap stocks first. So I think that's one mistake I've seen people get worried about. I think in general, I think if people are new to trading, they'll say, hey, I want to buy Microsoft. And they'll buy, if they have 10 grand to put in, they'll put 10 grand in all at once. And it's no, like that's not a good way to manage your risk. One, you should spread your chips out a little bit. Like I don't like more than 20 trading positions just because it's hard to keep track of, but I don't put all my money into three stocks either. Like you got to diversify, and I scale in and then I try to scale out. So it could be like, hey, I want to start a position in Microsoft. I'm going to buy some this week. I'm going to see what the market does. I'll buy some next week and just watch it and watch those support and resistance levels and scale in. Because I've seen too many people like they put all their poker chips in and then a Venezuela invasion kind of scenario happens and nothing it has no impact on Microsoft, as far as I know. Doesn't fundamentally change their company. They might do a little bit of business in Venezuela, but I'm sure it's not going to kill their bottom line. But the whole market sells off because of the fear trade, and now you're down 10 or 15%. And it's if you only bought 5 shares to start, and then you bought another 5 shares the next week, you're still in pretty good shape if you think Microsoft's a long-term hold.
Right, definitely. So it's just this kind of dollar cost averaging into the market versus,
Yeah, I don't like the dollar cost average on losers a lot. Like I try to find those support points. And if I'm wrong, I don't like to double or triple down on something that is in a downtrend. But pullbacks are normal. Pullbacks are good in a healthy market, right? Like you don't want these hockey stick charts to the right with these blow off tops that you've seen. Like uranium imploded last month. Like that had a great run. And nothing's fundamentally changed with uranium as far as I know. But I think people got a little scared with some of the AI trading and the power around it. And the fear trade just kicked on. And all of a sudden, a lot of people bought at the top and now they're down 30, 40%. So now you got to make a decision. Do you still believe in uranium? Is it still going to be a power source for AI? Do you still believe in AI? And you look at the charts, and there's some uranium miners that I'm looking at right now, or some just energy companies, power companies in general that are starting to build some pretty good support that I'm watching that I might start scaling back into some of these companies because who knows? They could make a run in Q1 or Q2 next year. So if that's a sector I believe in, I want to have some exposure to it. I'm not saying I want to put my whole portfolio in it, but there are certain sectors, if you're in at the right time and you catch that wave, you're going to outperform the market just by being in the right place at the right time.
I love it. So who's the best user for something like StockTA where they're going to need like analyst type of information? Is that like the everyday person? Who is the best person that's going to be fit for this?
It's a great question. I think someone who's sophisticated with trading, like we have some new users and people are new to trading, but I think it takes some time and some patience to one, understand our system a little bit, but two, how to implement it into their own trading. And I've seen new users, they use the system and then they panic and they get out of it. And then they email me and they're like, if I would have listened to the system and not panicked that one day, I would have been fine. But I didn't trust myself because I'm new to trading. So I think people who are more sophisticated and have been doing it for a little longer, I think probably have a better chance of being successful. But I think you could argue that in any field. But I think if you're new, I love Thinkorswim. I'm not affiliated with Charles Schwab or anything. I've just had them for a long time. Before I had TD Ameritrade before they merged. But in Thinkorswim, there's a paper money account that you can set up. Like you have to have a real account, but you could put $100 in and then switch over to the paper trading and you can just practice. And then you're playing with it's not real money, but you're actually playing the real market. So that's where you can work out some of the kinks. And that's where I've told people like, if you're serious about this and you wanna do it, start there, get a trading journal, keep good notes, reflect on your process. And for me, I think you got to be a lifelong learner if you want to succeed in trading. Like I'm always reading books, and it's not always about finance. It can just be about running businesses or different biographies, leadership stuff. But if what works today might not work a year from now or 6 months ago, might like you got to learn, you got to adapt if you want to stay successful. And I've had friends who they only trade crypto. And when crypto's doing really well, they think they run the world. And then when crypto does poorly, they're like, I hate this. I'm never trading again. I can't. And it's, dude, like crypto's fine from time to time, but just like everything else, like things change. So you got to adapt and you got to move with it. Like the AI trade was great this year for the most part. Gold and silver was great this year for the most part. But if you only know how to trade one sector, there's going to be ups and downs in that sector. So that's where like a software like mine, if you can build a general process and have a general tool like this to go in and out of sectors, you can catch those moves And that's where I think a lot of my users have been successful is they know themselves, they know what kind of trader they are. And I think you need to start there because if you're going to be a day trader, but you don't like risk, you that's there's no it doesn't mesh from day one. So you got to figure out what your personality is, what you can live with, what your risk parameters are, and then use a tool like this or others to implement it into your process to just try to improve your win rate. Like you're not going to win every time, but if you can win more than 50% of the time, you're going to be successful in the long run.
And I love that, Kevin, that you talked about a good bridge point where you can create a paper account and start testing in that paper account while you're learning how to do individual stock trades because you can make a lot of money in individual stock trades. It just takes a bit more education, a bit more research. And like you said, it's not just your intuition anymore. You're competing against algorithms that have figured out your trends and
Yep.
they know exactly where to drop the price to in order to get you to audit. You've got automatic sales in place to get that to trigger. So they're going to be able to sell high later on that day or even the next morning. So it's just a matter of just start with that paper account and start trading and looking at research and developing those habits.
Yeah, you got to get to know the numbers, right? Because it's a numbers driven market. So I'm a big numbers over narrative and I'm a big numbers over noise, right? I don't love watching I'll watch CNBC from time to time just to see what's going on, but I don't, what they talk about has 0% impact on my own trading. Like I'm not letting somebody else's narrative control my money. And I think that's where people get confused sometimes. Oh, they have this expert on, and this expert talks about company XYZ. Okay, they own a lot of company XYZ. So it's in their best interest to talk about that to try to pump it up to make money. And I'm not saying everybody's crooked, but you got to be aware and you got to really, there's a lot of noise in these markets. There's a lot of uncertainty, and there always has been, there always will be. So if you can't block that noise out, you're not going to be a good trader. So it comes back to the numbers. Like you really got to understand your numbers and you got to have a process that produces. And if you can't figure that out, then this probably isn't something you should do. Like at that point, you're probably just gambling. And if you want to gamble, your odds would be better to just find a local casino and just play roulette and bet on black or red, right? Instead of trying to pick these random stocks. Like I've been banned from couple different Reddit communities where people are YOLOing their life savings on a 0 day expiration option. And I'm like, you have a better chance of landing on Mars tonight than you do of hitting on this. And just because you think you bet $1,000 and you think it's going to pay out 1 million, those odds are slim because it's the slim chance of success. And yeah, there's been some Reddit groups that have some wins from time to time, and that's great. I'm not trying to take money away from anybody, but I think if you line those people up and say, okay, how'd you do over 5 years? How'd you do over 10 years? They're probably out of business because they just gambled and eventually the casino's going to beat them.
I love that. That's very true. You're better off doing your index funds if you're
Yep.
not going to be doing the research and really making educated decisions, especially in this era of algorithms. I think I'm pretty smart, but I would say probably some algorithms are a lot smarter than me just because they notice your habits, things that you don't even notice that you're doing, those ticks. It's the computer, right?
Yeah. I had a mentor once tell me I think his phrase was, if I get this right, it was play the game, change the game, or find a new game. So in this world, if you want to play the game, either give your money to a good financial manager or just buy index funds or mutual funds, diversify your risk, change the game, which is you got to create your own process, figure out how you're going to trade within that process, or you got to quit and do something else. And it's really that simple.
I love that. Now, I'm curious, like for someone that's starting, we talked about the paper trading and just getting started to test your game on that. What are some things that just to get some of these entrepreneurs that are great at their businesses but may not be savvy on the investing side, what's a good place to start to learn to be able to build that investment savvy?
That's a great question. I think just reading a lot of different investment books that are out there and trying to figure out if you want to be a value investor, there's some great value investor books on Amazon. If you want to be a technical trader like I am, there's some great books on Amazon for, understanding moving averages and what the different studies mean. Because if you want to be that trader, but you don't understand what the studies mean, you're not going to do well in the long run. So I think doing that, and then if you're going to start trading, like I love trading ETFs because it diversifies your risk. And if you like a sector, you can just go pick a sector ETF. So if you think energy is going to be great, you buy XLE. If you think tech's going to be great, you buy XLK. And then you can, that's kind of part of my process. If I think tech's going to do well, I look at the XLK ETF and I'll buy some of that. But then I look, what are the top 5 holdings in that? So that'll be your Mag 7. So if I think tech's going to do really well and Microsoft's the biggest holding, and I want a little more leverage without actually using leverage, then I buy Microsoft. Now I've doubled down on that tech bet. So you hope I'm right, but tech's in everything now. So it's hard to say, oh, I'm going to invest in tech because every company is basically a tech company now. But if you start with ETFs, I think that gives you a good macro perspective. And then they're easier to trade because there's more liquidity. The buy and sell asks are usually smaller, so they're usually easier to get in and out of if the market's healthy. And I just think that's an easier way to trade with less risk because if you put all your chips in one company and they miss earnings or there's a scandal or any number of things and it comes out, you're going to take a big hit where the ETF might only lose 1 or 2% because that company's only 3% of the total ETF. So I think if you're new, I think ETFs are a great way to start. Index funds are a great way to start. And then, like I said, take notes, learn, subscribe to podcasts where people actually know what they're doing, not just there's too much lack of process and just crypto's going to the moon. So I'm gonna buy crypto. Okay, why? Explain it to me, like with numbers, not some made up narrative, not, oh, I know somebody who said this. Present to me a scientific case, do your homework, and then pitch it to me. And if you're full of crap, I'm going to call you out and I'll see through it and I'm not going to buy whatever you're doing. But that's where the companies, I say they're interviewing for a job in my portfolio, like you you have to do your homework to see if it's the right company because you don't. Warren Buffett said you can't make a good deal with bad people, right? So if you invest in the next Enron and you put all your life's money in it, that's probably not going to turn out well for you in the long run.
Oh no, yeah, that definitely. I think a lot of people are still recuperating from that too. Definitely, we don't want anyone putting away everything into one stock. That would be really bad from that perspective. I think Kevin, the next thing that you might be doing is just doing writing a book on just terminology, right? What things are. I think might be a great place for a lot of these folks to start with. Kevin writes a book on just like what do these things actually mean? These big words. So.
And I'm self-taught, right? Like I took business classes in college, but the technical side of trading, this is just hours and hours of learning, right? And this is watching videos on YouTube to see it. Like I'm a visual learner. I can read it, but I want to actually see how these studies work. And like literally yesterday, I came across this guy had this new study on, he posted it on X and I looked at it and I'm like, okay, this is cool. But then it was you had to pay $200 to subscribe to his thing, and then you had to pay a monthly fee and all this different stuff. And I'm like, I bet I can reverse engineer this with AI. And I did. It took me a half hour.
Oh wow.
And I built my own study and now I have it and I saved myself the money. And it may not be exactly what he has, but I'll tweak it and I'll keep an eye on it. And if it doesn't work, I won't use it. But I'm always looking to learn and to add tools to my toolbox. So that's another tool to my toolbox. But this is hundreds of hours of just learning and then trying to put it into actual practice. So I think just start small and keep it simple. And then I've been doing this for a long time and thankfully I've been successful at it. But because I was successful yesterday doesn't mean I'm going to be successful tomorrow. So I got to keep that edge and I got to keep working and you got to keep learning. You got to keep adapting.
But a good thing is you said you only have to win 50% at a time. So,
Yeah. If you use your stop losses and you keep your losses small and you let your winners run, I don't know if you're a baseball fan or not, but you have batting average, right? So if you hit 5 out of 10, you hit 500. That's great. But slugging percentage is like how much power you had. So like you want a good batting average, but you want a high slugging percentage because that will be your profit margin. So like my average loss this year, I think in my main trading portfolio I looked at the other day was like minus 3.2%. But my biggest gain was like, or not my biggest, my average gain was like 9.5%. So if I have that 3-to-1 margin and I have over a 50% win rate, I'm going to have a healthy profit percentage at the end of the year.
yeah.
If my slugging percentage was the same as my batting average, I'd be even. Like You got to let your winners run. And that's hard sometimes, especially in this market where valuations get stretched. But if you manage your risk well and you let your winners ride and you have a 50% win rate, you're there's no guarantees in life, but that's the math of that basically guarantees you're going to be a profitable trader.
I love it. I love it. Now, Kevin, I always love to ask our guests, there's a piece of advice you could leave for our viewers and our listeners. What would that piece of advice be?
Yeah, this is another baseball term. I had a former coach tell me one time while I was in a hitting slump, try easier. And I think sometimes, like in baseball, you get in a slump, you grip the bat too tight. Now you can't swing the bat as well. You get in your head, you start putting pressure on yourself. And sometimes in life, you just got to try easier. And earlier this year, when Trump first came into office and the tariff stuff was crazy, I track all my wins and losses. I have a spreadsheet at my trading journal. I think at one point in January and February, I think I won 3 trades and I lost 21. And I was like, oof, that was the worst losing streak of my career doing this. And I'm like, this is rough. And it wasn't. And I sat back and I looked at my process. I'm like, process is good. Market's just crazy. It's not a political statement. I'm a registered independent. So please don't have your users cancel me. Trump was coming in and he was basically just throwing hand grenades and trying to change things up, which is what he ran on. That's what he believes in. Okay. But that doesn't make for a good market, right? Like Mr. Market likes certainty. When Trump first came in with all that tariff stuff, you had the far end of the spectrum of total uncertainty. So it just wasn't a good market to trade. So then I sat back and I'm like, you know what? Try easier. And then I waited and I watched. And then once the dust settled, I think I won 20 of my next 25 trades.
Wow.
And then after that, I won. And now my winning percentage is back. Like I'm back over 50% on the year. But I started 3 out of 20 is a pretty terrible percentage to start the year.
Oh, yeah. A lot
But
of people would have just walked away instead of taking this
yeah,
year off.
or pressed your bets. If I would have doubled down then and gone 3 for 40, I would have been in a world of hurt. Try easier. You got to sit back, you got to see, and it worked itself out. But if you press your bets at the wrong time and you try too hard, you might not get the result you like.
I love it. I love it. Thank you. And now, how do our listeners, viewers, how do we find you? How do we follow you? How do we learn more?
Yeah, I'll put my email in the show notes to you. You can feel free to send that out. And then it's just stockta.com. We have a Discord that if you go to the website, you can join there. It's free. The website's free. Like we're trying to help Main Street here. So, we will have some premium products down the road, but there's always going to be a free component to this because we truly do want to help people with their investing process. We have a YouTube channel. It's just at StockTA where we try to interview different people. I try to post what I'm looking at, what I find interesting, and I'm just trying to create a community of like-minded investors where we can hopefully all learn from each other and help each other trade better.
Thank you. And if you could give me your contact, which I think you will, for you guys that are
Yep.
driving, I will post that in the show notes so that you can go ahead and get in touch with Kevin, follow him, and learn more about stock trading. So thank you, Kevin, for joining us today and sharing your wealth of knowledge.
Thank you so much for having me. I really enjoyed this.
I want you to have your most profitable year ever. Yes, no matter what's going on in the economy, no matter what's going on in the world, you can have your best year ever. And I want to show you how. Join me in our private Facebook group where I will be hosting our free, yes, I said free, Profit First Masterclass. In Facebook, please join the Profit First Masterclass with Susanne Mariga. I look forward to seeing you there and watching you have your best year ever.